Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
Should critical illness strike, don't let worry fill your head. Say hello to happiness and goodbye to worry with Guardian Life's new Ultimate Provider Plan. Secure your medical expenses in the event of critical illness ahead of time while benefiting from our investment portfolio and so much more. Give yourself and your family the peace of mind you deserve with Guardian Life's new Ultimate Provider Plan today. And live secure, live easy.
We all have a champion spirit.
Bye, Daddy.
A uniquely Jamaican spirit. We think the unthinkable and reach for the unreachable. As powerful as we are, there comes a time when everybody needs a strength. Something to take you over that last hurdle and across the finish line. Your moment is now. Unstoppable with NCB.
Are you prepared to make the most of your golden years? With the NCB Pensions Portal, you can safeguard your future with ease. Access safe retirement planning opportunities anytime, anywhere. Enroll in a pension plan. Manage your investments. Adjust your contributions. Enjoy a world of convenience as you step into the future you desire. Log on to a better tomorrow. Visit smart.ncbinsurance.com to start planning now.
In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself.
The Wave built your career into a masterpiece, so you can have days that look like a work of art, will be the legacy that will live on as your crowning glory. Now let us help put the finishing touches on your brilliance with Clarion's vast experience, deep expertise, and digital tools, all focused to give you what you deserve, the finest things in life.
We know what you want. A little bit of fun. A little taste of adventure. You want joy. You want passion. Of course, security for you and your family. You want experiences that will last a lifetime and all your dreams turn to reality. To get exactly what you want, you need Clarion Plus. Our suite of tailored solutions and curated experiences gives you the freedom to shape Clarion the way you need, so you can build your life the way you want. Clarion Plus.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
Should critical illness strike, don't let worry fill your head. Say hello to happiness and goodbye to worry with Guardian Life's new Ultimate Provider Plan. Secure your medical expenses in the event of critical illness ahead of time while benefiting from our investment portfolio and so much more. Give yourself and your family the peace of mind you deserve with Guardian Life's new Ultimate Provider Plan today. And live secure, live easy.
We all have a champion spirit.
Bye, Daddy.
A uniquely Jamaican spirit. We think the unthinkable and reach for the unreachable. As powerful as we are, there comes a time when everybody needs a strength. Something to take you over that last hurdle and across the finish line. Your moment is now. Unstoppable with NCB.
Are you prepared to make the most of your golden years? With the NCB Pensions Portal, you can safeguard your future with ease. Access safe retirement planning opportunities anytime, anywhere. Enroll in a pension plan, manage your investments, adjust your contributions, enjoy a world of convenience as you step into the future you desire. Log on to a better tomorrow. Visit smart.ncbinsurance.com to start planning now.
In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself.
The way you've built your career into a masterpiece, so you can have days that look like a work of art, will be the legacy that will live on as your crowning glory. Now let us help put the finishing touches on your brilliance with Clarion's vast experience, deep expertise, and digital tools, all focused to give you what you deserve, the finest things in life.
Good morning. I'm excited to be here this morning. Welcome to our investor briefing, September the 15th, 2024. Luke 4, verse 24. Truly I tell you, no prophet is accepted in the prophet's hometown. Question is, why is that? And what is the opposite of that? Let's start off with why is that? You see, you may be looking too closely and only see the words, not seeing the whole picture. Secondly, you may not be seeing the forest for the trees. which means that we sometimes cannot see situations as they are, as they really are, while we are in the midst of them. In short, we lose our perspective when we are too heavily invested in a particular situation or approach. So what is the opposite of that? The opposite is every prophet is accepted outside of his homeland. From outside, you can see the forest for the trees. From outside, you can see the situation as they really are. From outside, you have a better perspective because you're not invested in a particular situation or approach. In short, you have a fresh pair of eyes. So let's try to look at NCBFG with a fresh pair of eyes. How do outsiders see us? Well, Fitch, the bond rating company. Wednesday, November the 13th, 2024, NCBFG rating B+, long-term foreign and local currency, issuer default ratings, IDR, and B, short-term foreign and local currency rating, IDR. The rating outlook for the long-term from Fitch is positive. Secondly, how do insiders see us? Let's talk about World Finance out of London. NCB was voted for 10 consecutive years. 2014, 15, 16, 17, 18, 19, 20, 21, 22, 23, and 24 as the best pension fund in the Caribbean. The best means number one in the Caribbean. So that's what we're seeing. November the 14th, 2024, last night, Global Bank and Finance Awards. For Jamaica, 2024, the best private bank, NCB. For Jamaica, the best CSR bank. The best foreign exchange bank, and Caribbean's best digital bank. You know, to build a better Jamaica, we have to recognize our prophets, the people who are doing things, the people who are creative, energetic, hardworking. We have to recognize those at home and uplift them. We have to praise them and to encourage them to be greater. So now let us look at the facts. Let us compare 2024 with 2023. Well, a year ago, we embarked on a turnaround journey. This was a turnaround. And because we're not happy with efficiency, governance, and customer experience. So let us look at what has been accomplished over the last year. As I said in prior investor briefing, one of the most focused metric I look at is the cost to income ratio. So in 2023, last year this time, our cost to income ratio was 86.3. Today, it's 71.6. You see, at 86.3, our margins, what we keep, what shareholders keep, is 13.7. At 71.6, our margins are 28%. To go from 13.6 to 28%, that's a 107% turnaround. Is this the evidence of a turnaround, ladies and gentlemen? Well, let's look at some more metrics. Net profits in 2023, last year, was 8.5 billion. This year, 23.525 billion. Is that evidence of a strong turnaround, ladies and gentlemen? Net profits attributable to shareholders last year was $3.29 billion. This year, $15.02 billion. Is that again evidence of a true turnaround? Total assets went from $2.2 trillion last year. This year, it is $2.32 trillion. Again, is that the evidence of a strong turnaround? Equity went from $171.53 billion. This year, it's $212.89 billion. Equity attributable to shareholders, $142.9 billion. This year, $174 billion. Is that the evidence of a strong turnaround? Earnings per share. Last year, $1.39 for the entire year. This year, $6.33. Again, is that the evidence? Return on assets last year was 0.4. This year, 1.03. And return on equity, 2.54 last year. This year, 9.47. Again, is that the evidence of a true turnaround? Now, to be clear, the job is not yet done. We've just gotten started, but the trend is fixed. And we certainly are not going to resile from doing what we have been doing all of last year. And I really want to use this as an opportunity to compliment the over 5,000 staff at NCBFG, which includes NCBJ in Jamaica, head office out of Jamaica, and GHL out of Trinidad, for doing this phenomenal job over the last year. And the momentum is clear, and we're seizing the day, because we have gone from actually headwinds that we faced last year, and we're now seeing tailwinds. Let me go back to, so our efficiency, as I mentioned, has increased significantly, but we're still not happy. We're not happy with a 71% efficiency. We are going to mid-50s. We're not happy with a return on equity of 9.47. That's not good. But coming from 2.54, it's directionally, it's fine. But we're not happy with 9.54. We need to get to 20% return on equity. That is what that's where we are going. So, in terms of governance, over the last year, we added some horsepower in terms of governance. Gary, sorry to refer to you as horsepower. We added Mr. Gary Brown, who was the former head of CIBC US and the head of First Caribbean Bank. We added Howard Shearer, who is the CEO of Hitachi Canada. You see, we recognize that for a turnaround to be successful, we have to imbue the entire organization with three things: a global perspective and standards. The entire organization. We have to imbue the entire organization to become better critical thinkers. And thirdly, we have to imbue the entire organization, all 5,000 staff members, with a problem-solving attitude. The addition of directors Brown and Shearer add to the bench strength of these critical muscles needed in the organization. And we now drive these characteristics throughout the organization. In terms of customer experience, as you know, a year ago, it was very, very noisy in the marketplace. Customers were overtly not happy. We have tamped that down significantly by being present with customers at their home, at their business place. We're in the field, and we're dealing with issues as they come up. We're not, and we're dealing with them efficiently as they come up. So we're on a good path now. We have come a long way, but still a far way to go. We're still not happy with what our customer service is. But again, directionally, the turnaround is obvious. And we have been rewarded by customers. The best reward is when they put deposits with us. So over the last year, our deposits from customers went from $747.9 billion to $784 billion, a 5% increase, or 36.1 billion in new deposits coming in, which signals a resounding vote of confidence. Dividends. For nearly 3.5 years, shareholders were not paid a dividend except for a 50-cent dividend. Last August, the board made a commitment that dividends are an imperative to be paid quarterly. Over the past year, we have paid 3 dividends of 50 cents each. And just last night, we announced that the fourth will be released. Fourth dividend will be paid on the 13th of December. And that will be a 50-cent dividend coming from zero. Not good enough in terms of dividend yield, but it's way better than zero for nearly 3.5 years. Our focus now is singular. Well, it's not singular. We have, I guess, a few focus, but primarily financial focus is to pay down debt aggressively, so that which will pave the way for shareholders to get increasing dividends. So that's our primary financial objective as we speak. Operationally, we continue to do the things that we've been doing over the last year with even more energy, even more passion, because we are energized by the results that we have seen, but we're still not there yet. And it's a work in progress that the entire 5,000 staff is taking on the challenge. So thank you very much, and have a good investor briefing. Thank you.
Thank you, Chairman, shareholders and investors, customers, representatives of the media and analysts, fellow colleagues, and other stakeholders. Good day. Thank you for joining our fourth quarter investors briefing, where we will discuss the group's performance for the financial year ended September 30, 2024. First, I will remind you that the group adopted IFRS 17 insurance contracts on October 1, 2023, replacing IFRS 4. Our insurance subsidiary Guardian previously adopted IFRS 17, effective January 1, 2023. This brought about changes in relation to the presentation, recognition, and measurement of insurance contracts, particularly within our life and health segment. The prior results were restated accordingly. With that being said, the group reported consolidated net profit of 23.3 billion for the year ended September 2024, representing a 14.8 billion or 174% improvement over the restated prior year. Net profit attributable to our shareholders was 15 billion for the year, representing a 357% or 11.7 billion increase compared to the prior year. The consolidated profit of 23.3 billion excludes a one-off gain of 3 billion, which was previously included in the first quarter of the financial year. The gain was related to the reclassification of certain assets by a subsidiary from amortized cost and fair value through other comprehensive income to fair value through profit or loss under IFRS 9. This gain is now shown in the restated prior year. Operating revenues increased to 120 billion, an increase of 4% or 4.6 billion over the prior year, mainly resulting from higher net revenues from banking and investment activities and increased insurance service result. Banking and investment activities of 121 billion represented an overall increase of 2% or 2.5 billion. There were improved gains on foreign currency and investment activities together with higher net interest income and net fee and commission income. The revenue and gains the increase in terms of our revenue and gains were partially offset by an increase of 4.5 billion in credit impairment losses across all business segments except consumer and SME, which was flat year over year. Higher insurance service results of 18.5 billion reflected an increase of 4 billion or 27%. Insurance finance expenses of 19.5 billion grew by 1.9 billion or 10% over the prior year. Operating expenses of 92.2 billion declined by 11.1 billion or 11%, resulting from the group's cost efficiency efforts, which included a reduction in staff costs of 18% or 10.7 billion. The prior year included non-recurring expenses, particularly associated with the staff restructuring activities, and the current year reflects sustained reductions from those activities. Other operating expenses also declined by 4% or 1.3 billion. The main areas of reduction included technical and consultancy, professional fees, as well as more efficient marketing and advertising. At the beginning of the year, we committed, as the chair indicated, to improve our key performance indicators, and the combination of increased revenues and the reduced expenses have resulted in an improvement in the cost-to-income ratio to 71.6%, down from the restated 86.38% in the prior year. Return on assets was 1.03%, while return on equity was 9.47% for the year ended September 2024. We acknowledge that greater improvement is required, and we're committed to providing higher returns to our investors and all stakeholders. I will now briefly discuss the performance of each business segment, starting with the life and health insurance and pension fund management segment, which reported operating profit of 24 billion, which was a 6.1 billion increase compared to last year. The segment's result was favorably impacted by increased insurance service results and gains on investment activities. Maintenance of policies coupled with new business, principally from operations in the Dutch Caribbean and Bermuda, were the contributing factors. This segment was the highest contributor to the group's operating profits. The Treasury and correspondent banking segment remains the highest contributor within the overall banking segment and reflected an operating profit of 12.9 billion, a 3 billion or 31% increase compared to the prior year. The increase was mainly attributable to higher net interest income driven by the tight monitoring of interest rates and margins. Our general insurance segment recorded operating profit of 6.1 billion, a 3% decline from the prior year performance. This was driven by lower net fees and commission income, together with lower other operating income. The wealth, asset management, and investment banking segment generated operating profit of 2 billion, a 77% or 6.5 billion decline compared to the prior year. This segment experienced a decline in net interest income as elevated market rates continued to impact the cost of funds. The prevailing market conditions also resulted in lower fees and commissions from investment banking activities. Additionally, the segment experienced reduced realized and also unrealized fair value gains. Despite these headwinds, we remain proactive in adjusting our portfolio to capitalize on emerging opportunities, ensuring we stay well positioned for future growth. Our corporate and commercial banking segment reported operating profits of 5.3 billion, 965 million or 16% lower than the prior year. The segment's net operating revenues declined predominantly due to higher credit impairment losses, mainly related to credit facilities within that segment, in addition to a marginal decline in net interest income. The payment services segment, which includes card acquiring, card issuing, as well as the Link mobile wallet, generated operating profits of 2.4 billion, improving by 906 million relative to the prior year. There continues to be steady growth in our card services business, resulting in increased net fee and commission income, given increased card receivables, sales, and transaction volumes. These improvements were partially offset by higher credit impairment losses as well. As you may recall, at the start of the financial year, National Commercial Bank, Jamaica Limited, partnered with TFOB 2021 Limited for the bank to manage the Link mobile wallet. The objective is to leverage the bank's ecosystem and banking platform to create a centralized platform that simplified access to banking, insurance, financial products, and payment services while offering a cost-effective digital-first model. Additionally, Link boosted its remittance services through strategic partnerships with a strong focus on future growth. The synergies have resulted in sizable reduction in operating expenses. The consumer and SME banking segment recorded an operating profit of 1.8 billion, a 2.5 billion improvement over the net loss of 719 million reported in the prior year. Higher net interest income and fee and commission income, along with lower operating expenses, were the main factors influencing the increase. We will now briefly discuss key areas of the group's statement of financial position. Our asset base stands at 2.32 trillion, an increase of 116.7 billion, or 5% over the prior year. The group continues to experience growth in our main earning assets, driven primarily by loans and investment securities, which grew by 2% and 5% respectively. Customer deposits grew to 784 billion, up 5%, or 36.1 billion over the prior year. There was a significant focus on deepening customer relationships within our Jamaican banking subsidiary during the year, contributing to the growth in the number and value of deposit accounts. Obligations on the repurchase agreements grew by 300.5 billion, reflecting a 19.8 billion or 7% growth relative to the prior year. Insurance and reinsurance contract liabilities, along with investment contract liabilities, increased to 595.4 billion, up from 561.6 billion in the prior year as a result of increased business activities. Total stockholders' equity increased to 212.9 billion, growing by 24% or 41.4 billion over the prior year. Equity attributable to stockholders of NCBFG stood at 174.4 billion, an increase of 31.5 billion or 22%. The growth in equity was primarily due to increased retained earnings and a reduction in unrealized fair value losses. Share capital also increased as a result of the APO, together with shares issued to current and former executives during the year. When we look at capital, all our regulatory entities exceeded the applicable capital and also liquidity ratios with adequate buffers. As the chairman indicated earlier, the board of directors at a meeting held on November 14th, 2024, approved a dividend payment of 50 cents per share, which is payable on December 13, 2024, to shareholders on record as at November 29, 2024. Overall, our group has the key attributes to achieve high and sustained performance. These attributes include scale, market leadership, diversified business segments, and diversified geographically. These strong fundamentals support our positive outlook. In closing, I express my gratitude to our team across all our entities for your dedication and hard work. I extend my appreciation to our valued customers and stakeholders. With that, I will now turn over the proceedings to our Group CEO, Robert Almeida.
There you go. Okay. Sorry about that. Thank you very much, Malcolm, and thank you very much, Chair, for those opening remarks. So good morning, everyone, and thank you for joining us for this Q4 briefing. Your confidence for NCB Financial Group empowers us to pursue our vision with purpose and with discipline. As one of the Caribbean's leading financial services providers, we recognize that the path to sustainable growth is seldom easy. Today, I am pleased to report that despite ongoing challenges, our effort to reinforce stability, drive efficiency, and enhance customer experiences across our group are gaining traction. We are progressing steadily toward the long-term goals we set for NCB Financial Group, staying true to our disciplined approach. It has been one heck of a year. I'm pleased with what we've accomplished. I wish we could have made more progress as we are not where we need to be. But given, as the chairman said, we are on the right track, and that just leaves more opportunity for the future. We started the fiscal year just ended with some major changes. Over the course of the year, we have worked hard to address operational and customer service issues, to clean up the balance sheet, to monetize non-core and underperforming assets, to reduce and refinance maturing debt, all while strengthening our capital base and restoring stakeholder confidence. By closely monitoring our key performance indicators, we have successfully navigated high inflation and rising interest rates, maintaining a robust financial position. Our disciplined management has enabled us to absorb these pressures while focusing on core objectives across our group: efficiency, governance, customer experience under the acronym EGC, which guides every decision we make. Across the Caribbean, inflation has had a considerable impact, including wage rates and utility costs. Faced with a cost-to-income ratio of over 80%, we took decisive steps such that, notwithstanding inflation, consolidated operating expenses decreased by over $11 billion, or just over 10%. Even adjusting for the one-time costs in the prior year related to the reorganization, operating expenses declined by about $3 billion, notwithstanding inflation. Just as households have had to adapt, NCB Financial Group has implemented proactive financial controls to safeguard our operations and meet customer needs. Nonetheless, we need to do more to improve our productivity. Whilst we can all relate to inflation, it is important to note that interest rates are our cost of goods sold. In other words, they're our biggest cost. So when interest rates rose from 0.5% to 7%, that was equivalent to 1,400% inflation in our cost of goods sold for our banking and capital markets business. In the face of that cost pressure, we continued to support the market with loan growth and absorbed some of those rate increases through compressed net interest margins. As you know, the banking business is a favorite focus of criminals. Traditional robbery of cash, as well as frauds, scammers, phishing, and other cybercrimes. Rising criminal activity combined with inflation adversely affects our costs of moving cash to and from customers, branches, and ABMs. However, consistent with our mission, we continue to operate what is far and away the most extensive ABM and point-of-sale networks in Jamaica, and our ABM service levels are above industry average. As I'm sure you can appreciate, inflation also adversely affected reinsurance costs and insurance claims, particularly in the property, auto, and health lines. Once again, in the face of those headwinds, we continued to fulfill the region's need for protection, as evidenced by the growth of our insurance revenues. In the face of all these challenges, we have not only maintained, but have increased our capital strength. Consolidated net profit increased by 174% to over $23 billion. Consolidated stockholders' equity increased by about $40 billion, or about 25%. In the NCB Financial Group standalone company, we raised approximately $2.5 billion through the issuance of new equity. And of the approximately $46 billion of debt that matured in fiscal 2024, about $13 billion was repaid and the rest successfully refinanced. Most importantly, we have been rewarded for our efforts with more trust and confidence by our customers. Bank deposits and insurance contract liabilities are the greatest barometer of the trust and confidence our customers place with us. It's how they vote with their money. Deposits grew by about 5%, and insurance contract liabilities grew over 6% year over year. We are now entering a period of normalization as inflation reduces, interest rates stabilize, and liquidity pressures ease. We are optimistic that the headwinds that we've been facing have at least ceased to be headwinds and have started to shift into tailwinds, and that our efficiency and our customer experience initiatives that we started will accelerate. Turning to governance, it's a key pillar of our EGC network. In the last fiscal year, we re-engineered the architecture of the boards of directors within the group and have onboarded directors who bring independence, expertise, and technical competence, better aligning us with global standards. Strengthening our boards with experienced professionals remains a top priority and will continue to enhance the group's governance framework, positioning us for sustainable growth and regulatory alignment. Of note, we have now fully implemented IFRS 17 across the entire group, and we are ready for Basel III implementation whenever it is enacted by the Bank of Jamaica. Support of our local communities has always been a defining feature of the group. One of the most profound examples of our commitment to the community came in the wake of Hurricane Beryl. Across the Caribbean, from Jamaica to the Cayman Islands, our teams worked diligently to maintain operational continuity, reopening branches promptly to provide stability and support. The Building a Better Jamaica Fund, established in response to the disaster, raised over $395 million, surpassing the initial target of $300 million, thanks to the partnerships and the generosity of donors. This initiative is a testament to the solidarity and resilience of the Caribbean community and our role in supporting recovery. Work is underway, and the match funding has been instrumental in supporting recovery efforts that, as of September 30th, impacted over 9,000 lives, with 871 homes and roofs restored and 424 fisher folks and farmers assisted, with more work underway. Looking ahead, we are focused on achieving our goals with a disciplined approach to execution. By reducing the cost-to-income ratio and improving efficiency across our operations, we aim to become the regional leader in cost-effective, customer-centered financial services. Simply put, we just aspire to be the primary financial services relationship for everyone, helping them to create and protect their wealth. From a capital perspective, our plan continues to be to combine the earnings power of the business and the monetization of non-core or underperforming assets to 1, reduce debt, 2, pay reasonable dividends, and 3, reinvest in growth. Our assertive goal is to return to and exceed pre-COVID levels in our financial performance by 2026. A cost-to-income ratio in the 50s, return on equity in the high teens, and dividend payout ratio in the 50% range. Achieving these standards would put us in line with world-class standards, and that in turn would increase our ability to attract capital to the region. I'd love it to be faster. We would love it to be faster, but we understand that perseverance is a critical ingredient in achieving sustainable success. Our disciplined approach is already yielding results. You've heard that in our results today. And that strengthens our conviction and our commitment to the journey. In closing, I'd like to thank each of you, staff, stakeholders, shareholders, customers, partners, fellow directors, all of you for your continued support and trust in NCB Financial Group. Together, we're building a future of sustainable growth, resilience, and shared opportunity. Thank you, and I look forward to your questions and our discussion. And with that, I'll pass it over to Dave Garcia.
Thank you, Rob, and good morning, everyone, and thanks for staying with us. I will move speedily through the questions that have been submitted. First, we have a question from David Rose. He asks, I think I'll just take this one. Is there any update on when the NCB Cayman sale and the Clarion Group sale should be completed? And the response to that is that there is no further update that we can share at this time, but these are both transactions that we continue to pursue subject to regulatory approval. Next question, I think maybe I can ask Rob Almeida if you can take this. And the question is this, it's also from David Rose. I heard that Clarion Group paid a dividend in Q4 2024. What was the value of that dividend in US dollars and in Jamaican dollars? You can perhaps clarify the information.
Yeah, sure. I don't know, if Ian or Malcolm can correct me. I mean, my recollection is it's about $4 million US dollars, about 300 million Jamaican dollars would have come to, sorry, 4 million was paid up by Clarion, about 2 million of that would have come to NCB, which would have been about 300 million Jamaican dollars, David. But if I got that wrong off memory, Malcolm will clarify.
Okay. Sure. So you're correct. I have it at 3.7 million US, so that's approximately 4 million.
Yeah.
Okay, great. Thank you. And Rob, you can stay on for the next question as well. Doreen Bromfield asks, does NCB plan on buying back any shares given the current price of the shares to help increase investor confidence?
So it's a capital, when you talk about capital allocation, the prioritizations, and you'd have heard our prioritization right now, you heard from the chairman, as well as from myself. We're looking to, first and foremost, reduce our debt, maintain our dividend payouts, reinvest in growth. In that third category, our shares are exceptionally cheap. And so in terms of we have to reinvest in growth in our operating subsidiaries. So that reinvestment in growth down at the operating subsidiaries of NCBJ and Guardian is going to happen. And at the parent company level, our priorities would be to reduce debt and maintain the dividend payout, and with share buybacks, if you will, being the priority that comes after that. So no immediate plans for that.
Okay. Thanks, Rob. The next question I have is for Ian Chinapu. Ian, the question is this: have Guardian Life Limited and Guardian General Insurance in Jamaica adjusted premiums in line with inflation this year, or have you focused on seeking more efficiencies out of the business before passing on the cost to customers? And then also, are you seeing any major upticks in group life business? That question from David Rose.
Sure. Good morning, all. Well, of course, we do look at our efficiencies in order to ensure that we are always driving our business to be most efficient. But the basis on which premiums are reviewed are a number of factors. So one would be our cost of reinsurance, which does factor in, our global reinsurers do factor in the cost of settled claims, oftentimes impacted by inflation, particularly in health and motor. But also other factors, which include the level of claims, will also impact our review of premiums, because many of our policies are for groups and would be impacted that way. So inflation specifically is not, we would not have increased premiums in line with inflation, but inflation would have been a factor that would have impacted our review. And of course, we would have mitigated that by our continuous improvement in efficiencies, which I believe you would be able to see that we have reduced our cost to income ratio at Guardian from 21 to 20%. And that would benefit ultimately our customers. In terms of the second part of the question, yes, we have seen an uptick in our insurance service revenue, our insurance business in GLL, as well as other businesses across the region. And I think that is a very good sign. People are seeing the value of getting, reviewing their life insurance, reviewing that for their families. And we have seen an increase, I think about 9% is our year-on-year increase over this period.
All right. Thank you, Ian. Next question is for Angus Young. And the question also from David Rose is this: Angus, with respect to NCB Capital Markets, what's the next major horizon for the business? The high interest rate environment would have been difficult for many capital markets businesses over the last year, but rate cuts have begun. Are there major deals taking place in Guyana, Trinidad and Tobago, and other regional hubs? And are there any new client offerings from a product or technology standpoint that are being introduced?
Thank you, Dave. Good morning, everyone. Thank you for the question. Absolutely, the change in monetary policy is going to be a significant catalyst to the performance of NCB Capital Markets. You will see the investment banking division lead this change and this trajectory in earnings. We have already built a Q1 and 2025 deal pipe that will tangibly demonstrate this turnaround. The beauty about the investment banking business being embedded in NCB Capital Markets is that it has exponential effects in the sense that there are multiple bites of the apple, so to speak. So investment banking will see a very steep curve upwards going forward in terms of earnings trajectory, but there are the knock-on effects. In addition to fee income, it will improve the net interest margins of the firm, but it would also put those trading opportunities on the table for our trading teams. So there's an exponential effect for performance of our investment banking team. We're being very, very deliberate across the region in terms of dialing up investment banking with the headwinds of high interest rates and tight liquidity now turning into tailwinds. We are in a great position to take advantage of this change. And I assure our shareholders that we will deliver a much better performance this coming year, and that will be led through the investment banking team kicking off this trajectory. To answer the second part of the question, absolutely, there are significant transactions taking place regionally. I'm very proud to say that we did Trinidad and Tobago's first IPO in 5 years. It was a junior IPO, and it is the first junior IPO in Trinidad and Tobago's history to ever be oversubscribed, and that was done by our subsidiary, NCB Merchant Bank Trinidad and Tobago. Late in September, we would have also closed some fundraising for Guyana's largest shore base, the Gisby shore base in Providence, Guyana. And then, of course, in Jamaica, I'm very proud to say that we would be on the #1 on the leaderboard for both ECM and DCM transactions for fiscal year 2024. And it is our intention to maintain that position into fiscal year 2025.
Thanks, Angus. All right, let's switch over to a question for Malcolm Sadler. Malcolm, and this question is also from David Rose. And he is asking if you can comment on what was the final take-up of the $15 billion NCBFG bond in August, and what's NCBFG's, and that's as a standalone company, what's NCBFG's cost of debt now after its recent round of refinancing?
Thanks for the question, David. So the final take-up of the debt that matured in September was 100%. It was fully subscribed. I think there's a second question.
Yeah, the second question was about the cost of debt of NCBFG now as a standalone after that recent round of refinancing.
Yes, as of September, the average cost is now 9.4%.
right? Thank you, Malcolm. Next question is for Sherry Martin. I'm going to read the question. Sherry, here goes. There's been a near doubling in the ECL provisions year over year. Before CFO Sadler references the NPL ratio, please bear with me, says David Rose. NCBJ had around $14 billion in non-performing loans last year, and these provisions reflect future estimates and current experiences with payments on credit-related products. Is it the case that on the retail client side, there is growing strain for persons to manage amidst possible personal difficulties to afford the cost of living? And on the business side, is there a growing increase in loan demand from SMEs to supplement working capital due to slower business activity?
Thanks, David. Morning, everyone. Let me answer the question back way. We are, in fact, seeing more robust demand for financing, where we have positioned ourselves in that area is to try and make the process easier for SMEs, essentially trying to ensure that decisioning can be improved. We're not satisfied with the time it takes for us to just give an answer to an SME for loans. And we know many times their applications or their considerations for financing are very time sensitive. And then we have to look at the use to eventually get that loan disbursed. And so our focus, as you'd have heard before, for the marriage.
Oh.
We seem to have an interruption in Sherry's connection. So what I'm going to do is I'm going to move on to another question, and then we can always come back to this one, or if not, we will provide the remainder of the answer offline. We have some questions here for Daniel Cameron Duncan. So Daniel, you had to know that we would be asked about this. It's from David Rose. He says, I've seen a lot of discussion on this Uber situation with NCB in the last month. Could you explain the issue between NCB, Visa, and Uber, which led to those massive reversals that were being observed for some time? Also, in your investigations, how long has this reversal issue been going on? What's the estimated cost? How much has been recovered so far through liens placed on client accounts? And is there a loan product in place to allow for clients to repay these sums on an ongoing basis?
Thanks for the question, Dave. Good morning, everybody. Thanks for the question, David. Sorry, David and Dave. Yes, on the Uber issue, so as you identified last quarter, end of last month, we identified there was a significant number of reversals taking place on the platform. Reversals for us are a normal transaction. The uptick, I would say, in the last 3 months was significant, and we started our investigations. Essentially, what happens is for a transaction that we noted on Uber, when you initially book an Uber ride, it does an estimate of the transaction cost and takes that from the account immediately. At the end of the ride, what will happen is if you went longer distance or shorter distance, the cost would therefore be less or more than what was estimated originally. What should be happening is there's an adjustment to the customer's account for the change in the cost of the transaction, either up or down. What was occurring is that there was a full reversal of the transaction on the customer's account. So if $500 for the transaction was booked and it was only supposed to adjust it by 100, it was instead reversing the 500. And so the bank was paying for the cost of all the transactions. What we noted is that there are some people who took advantage of that situation. And so what has happened is that there was a significant number of transactions that then increased as a result of that. We did the investigation and would have reversed or posted to the customers' accounts any transaction that would have occurred over that period that was credited from the customer's account from before. And we would have, for the accounts that did not have sufficient funds to cover the number of transactions that were taken, we would have put a lien on the account. We would have reached out to all of the customers advising that there has been an adjustment as it relates to the Uber transactions that were taken and not paid for. We would have also advised that we do have a loan product, a loan in place, or will look at for customers who reach out to us, a way to help them work through that payment, because we can understand that you are not expecting to have all of that payment at the same time. And so we ask everybody to reach out to us at customer care to discuss options for a payment plan related to that transaction.
All right. Thanks, Danielle. Next question for you. What's the status of the virtual Visa card with Link? Has there been any write-down of NCB's investment in TFOB 2021? And how has NCB's ePOS performed so far this year after launch?
Okay.
Yeah.
That's a good question. So no write-off to TFOB, since we would have partnered with TFOB to take over the operations of Link. Right now, we are in the final stages of certification of Visa within the Link app. And what we're working on is allowing for tap. So NFC capability from Link is what we're working on right now. And so we need to finalize certification, finalize approvals with the BOJ, and then we'd be prepared to launch Visa in Link as well as NFC capability so you can tap and use the transactions. I want to say thanks again for the question around ePOS. ePOS is doing fantastically. We launched ePOS about 4 months ago. So ePOS is our virtual, essentially, card acquiring solution that you can acquire, merchant can acquire transactions using their mobile phone, an Android phone or an Android device. And all you have to do is hold the phone up against the customer's card and it will process your transaction for you immediately. Easy to download, easy to use, no physical device, everything is connected to you. And we've really been targeting our MSME client base with the product with very little, I would say, marketing, because we did do 2 very great events last weekend and a couple of weeks ago. Over the last 4 months, we've had over 1,200 people sign up for ePOS. It's about 300 a month. I think it probably ramped up after this last couple of events that we'd have done. And significant transaction flows, especially for our MSME space. We're over $60 million in transactions in 4 months. So very excited about that product, very excited about the future of that product. I think it's going to be very impactful, especially for MSMEs, for our T&E space as well. And so we're going to be doing a lot more with that over the course of the next year.
All right. Thanks, Danielle. And then, next question from David is, there are a few questions that he has about NCB Pay, just asking about overall, how it's been doing in terms of the take-up, and then also what has been the experience in dialogue with merchants who are fearful and reject contactless payments through the NCB Pay mobile wallet. And he says some merchants are taking the cards and tapping themselves and rejecting contactless payments by phone.
Yeah, so interestingly, contactless, it's been years since we've actually had contactless enabled on our point of sale machines, right? And it took us years to really push culturally acceptance in the merchant base. There are a lot of concerns around whether or not, if they needed to have a transaction queried or reversed, it would be any different. It's exactly the same process as if you had inserted the card into the point of sale machine. There's no difference between tap and, inserting the card, no difference between tap and a mobile app tap transaction. And so we've been doing a lot of work around educating merchants on that. Like I said, years ago, we introduced contactless on point of sale machine, and we've been doing the education. Today, almost 30% or more of our transactions are contactless, and we actually lead in the Caribbean in terms of contactless transactions. So same process, same security protocols in place for tap. Similarly for mobile. As a matter of fact, I tell customers, I tell merchants, mobile transactions, mobile tap transactions, and tap transactions generally are the most safest transactions you can do. We want you to not hand over your card to anybody. The mobile transactions on NCB Pay are tokenized transactions, so your card detail is nowhere near any machine. There's no risk of any sort of swiping issues or whatever that you get fraud related to that. And so we continue to educate the public around that. We continue to drive the behavior. We're seeing an uptick in terms of contactless, like I said, leading in the Caribbean. We're seeing that continue to grow, and we're encouraging that to continue to grow with our merchants as well.
All right, thanks much, Danielle. I think we have Cherie back now, so I'll come back to her quickly. So Cherie, there was a context in relation to ECL. Right. for the question. I'll ask Bruce afterwards to comment on that context, but the specific, on the ECL movement, but the specific piece for you that you were answering before we got that connection issue was in relation to, the retail client experiences that you're seeing, strain for persons to be able to manage, amidst personal difficulties to afford the cost of living. And on the business side, is there a growing increase in loan demand from SMEs to supplement working capital due to slower business activity?
Thanks, Dave. And I'll try and be brief so that I can get the answer in case there are any other connection issues. Essentially, we are seeing robust demand for SME support. We had a 120% increase in our SME segment by virtue of number of accounts and new relationships in the past financial year. So we see that as a sign of confidence in NCB as a financial partner for SMEs. But as I was saying, where they need support in terms of financing, our goal is to ensure that that process is more seamless than it has been. We have to get our approvals quicker to these customers. We have to then get the disbursements to these customers faster because obviously they're coming for help and they need that help in a timely fashion. And so operational efficiency, which is a theme you've heard us talk about here today, continues to be a major focus that we believe cannot wane. On the consumer side, we had around an 89% increase in new accounts for the consumer side. And we think a number of things are impacting that. Yes, we believe, persons are in fact, not being able to save as much. And we're seeing that in the number of savings accounts versus transaction accounts, where, persons would get like salaries to make payments. And so generally, I think, we do follow the ups and downs of the economy. And so it would be no surprise if we're seeing any highs and lows as a result of what's happening in the macro environment. But we stand ready, of course, with the solutions, whether through pricing or other services for access to help our customers thrive.
All right, great. Thank you very much, Cherie. And let's have Bruce Bowen. Then also what we'll ask him to do is to comment on the ECL movement on the ECL provision movement year over year. Bruce?
Right. And thanks, David, for the question. In terms of the ECL movement, it's really spread across multiple areas of the business. And the reason I wanted to jump in is because the relative impact of the consumer and SME area is actually less than some others. As Cherie mentioned, we're not seeing beyond a normal level of ECLs there. We have seen some pickup in the ECLs in the credit card portfolio. That is in part because we've had a very significant growth in that card portfolio, but even on a percentage-wise, there's been some lift. There has been some increase across commercial corporate. Interestingly, less in Jamaica than in some of the other countries because our portfolio, while the vast majority is in Jamaica, it is a regional portfolio. And then the other thing that came into play is, and not to speak for Ian in Guardian, but there are loans and receivables in Guardian that that roll up into that number, and it's less an issue of increases there, but there were some adjustments that reduced the number last year. So getting back to a more normal level is what attributed, what led to the overall NCBFG group. So pretty reasonably spread, but within Jamaica itself, where the majority of our traditional bank loan portfolio is, we haven't seen a noticeable, a significant increase overall in the ECL levels. It's a lot of kind of broadly across the group and some one-off things.
All right, thanks, Bruce. And since I have you on the screen, let's just keep you for the final question for this session. Jay Blake asks, BOJ recently updated their service level standards. How is NCB managing in relation to that? And I'm going to imagine that it's the ABM service level standards that to which the question relates.
Yes, absolutely. That likewise assume that. It's I mean, we are, and the data is published on a monthly basis by BOJ, and looking at that, people would see that we are generally above, I mean, we're above average in terms of the performance of the network. We've invested a lot to make sure that the combination of improved monitoring,
all right, we seem to now be having an issue with Bruce's connection. Daniel, I believe that you know what this means. We're going to ask you to come on screen to comment on that issue of how we're managing with the service level standards. And while we bring Daniel up on screen, what I can say is that those standards require there to be a significant governance framework around ensuring, number one, that we are that we're fully aware of what the requirements are, and then also that we have a process for implementing and monitoring. And that framework we have been in the process of building out. Daniel's team has done quite a bit of work on it. And then we do monitor, of course, uptime, availability, etc. And as Bruce was indicating earlier, when you look at the data, which is publicly available on the Bank of Jamaica's website, we are among the top performers in terms of those metrics. And additionally, of course, it must be borne in mind that we do have the largest ABM fleet in the country, and that has implications for availability and management also of availability of cash within Jamaica. But Daniel, you're now up. I was just holding for you until you came.
You've answered the questions, Dave. So yes, so as you said, we have the highest number of ABM fleets across the island, 300 machines, over 300 machines, and serving over 34% of the market in terms of ABMs. And I think it's important to mention that over 2/3 or 1/3 of the transactions that we do are for other bank customer transactions. And then we almost have 2/3 of that fleet distributed across the island rurally. So not in Kingston and St. Andrew, 2/3 of our fleet is distributed across the island. So in terms of the standards, we have done, as Dave said, a lot of work in terms of ensuring that we are at the top of that performance line from an availability perspective. The BOJ standards dictate that we should be at about 95% availability. So access to cash is available 95% of customers. We have found that almost 97% of our transactions are done between hours of 6 a.m. and 10 p.m. And in that time period, we have 97% availability across our 300 plus machines. So we're really working hard internally as well as with our partners to ensure that access is available for our customers. Last year alone, we would have dispensed over $380 billion, that's over $1 billion a day, out of that fleet to customers, our customers and customers of Jamaica. And we are proud of that. And we continue to work hard to ensure that we're performing consistently and meeting our customers' needs. We know there's still a lot of work that we need to do there, but we are committed to continuing to improve on the service and the availability to our customers and customers of Jamaica.
All right. Thank you very much, Danielle. And that brings us to the end of the Q&A section for this morning. We did have a few other questions, but we can't take all the questions in the time that's available. So as usual, we will seek to have all questions answered subsequent to the meeting once we have contact information for the persons asking them. I believe that means, Chairman, that I am handing back over to you.
Thank you very much, Dave. Thank you very much, executives. As we all can sense, there's excitement here at NCBFG. There's excitement here in Jamaica. There's excitement here in Trinidad, in the Guardian Group. And we're just really appreciative of the support that we have been given and the confidence that we continue to enjoy. And we certainly are working to make sure that that confidence is not misplaced. And as you can see, the turnaround is strong, it's happening, and we are excited by the tailwinds that are now behind us. Last year was tough, but we ground it through. Now, interest rates are going down, liquidity is a lot more. But we'll continue to be energized and continue on this trajectory of turnaround. Thank you very much.
We know what you want. A little bit of fun, a little taste of adventure. You want joy. You want passion. Of course, security for you and your family. You want experiences that will last a lifetime and all your dreams turn to reality. To get exactly what you want, you need Clarion Plus. Our suite of tailored solutions and curated experiences gives you the freedom to shape Clarion the way you need, so you can build your life the way you want. Clarion Plus.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
Should critical illness strike, don't let worry fill your head. Say hello to happiness and goodbye to worry with Guardian Life's new Ultimate Provider Plan. Secure your medical expenses in the event of critical illness ahead of time while benefiting from more investment portfolio and so much more. Give yourself and your family the peace of mind you deserve with Guardian Life's new Ultimate Provider Plan today.